On the morning of July 7th, 2026, some of the largest funds on Earth will be forced to buy a single stock. Not because they studied it, not because a manager looked at the numbers and decided it was cheap. They will buy because a rule points a gun at them and says one word: buy. Hold on to that image because it is the whole story. The company is SpaceX. On June 12, 2026, it completed the largest initial public offering in history, but is largest ever the same thing as best ever. Those are two very different words. Here is the number that matters. SpaceX raised roughly $75 billion, and on its first day, the market valued the company above $2 trillion. That single day made Elon Musk the world's first dollar trillionaire. Enormous. Historic, and yet, according to Morningstar's own analysts, worth less than half of that on a discounted cash flow basis. They pegged fair value near $780 billion. Why the gap? Because a market price measures what buyers will pay in a frenzy, while a cash flow model measures what the business is likely to earn. Those two numbers rarely agree at an IPO. Here, they disagreed by more than $1 trillion. So you already have one thing worth keeping. The biggest deal in history and the best investment in history are not automatically the same sentence. I'm Ori Kalem. I dig into the facts about money that most people walk straight past, and here is why it lands close to home. If you hold an index fund, the kind sitting quietly inside most people's retirement savings, this story reprices something you already own. Because on July 7th, your fund quietly becomes a forced buyer of this company, whether the price makes sense or not. Nobody will ask your permission. 3 things in this briefing. 1. Why a rule, not a judgment, is forcing that purchase. 2. The calendar almost nobody is reading, the one that decides what happens next. 3. The part that should make you sit up. We have watched this exact movie before, and we know how it tends to end. So here's what actually matters. On July 7th, 2026, SpaceX joins the NASDAQ 100. That sounds like an honor. It's really a plumbing change. More than $800 billion is benchmarked to that index, and every fund tracking it now has to make room for Musk's rocket company. Think of it like this. An index fund doesn't pick stocks. It's a mirror. It holds whatever the index holds in the same proportions, and it leaves every judgment call to the rulebook. So when the rulebook adds SpaceX, the mirror has no opinion. It simply must reflect it. That forced buying is the whole story of July 7th. JP Morgan estimates it at about $4.3 billion of purchases, much of it firing after the closing bell on July 6th, the session before the change takes effect. $4.3 billion, arriving not because anyone chose to, but because the index rebalanced. Why does that matter so much? Because of one strange fact about this particular stock. When SpaceX listed, only about 4 to 5% of its shares were actually available to trade. 4%. The other 95 sat locked away. Why does a tiny float matter? Because scarcity is a lever. When billions of forced dollars chase a sliver of shares, the price doesn't drift. It lurches, and that scarcity is exactly what lifted the stock in its first weeks. It opened around $150, well above the $135 offer price, and traded far higher still. Now, part of that was genuine excitement. This is Musk. This is rockets. This is a name everyone knows. But part of it was pure plumbing. When only 4% of a company is available and a wall of demand slams into it, the price cannot drift gently. It has almost nowhere to go but sharply up. Hold that thought carefully, because scarcity, unlike enthusiasm, has an expiry date stamped right on it. But that's not the end of it. Now you might be thinking, if Wall Street is forced to buy and the shares are scarce, doesn't this only go up? That's the trap in the question, because the same design that created the scarcity is engineered to destroy it, on a schedule that is already public. This is card 2, the calendar. When insiders take a company public, they usually promise not to sell for a set window. It's called a lockup. Most last 180 days. Why? So the market isn't flooded with sellers the moment the stock lists. SpaceX did something cleverer and more revealing. Instead of one cliff, SpaceX built a staircase. Shares don't unlock all at once. They release in tranches tied to earnings and fixed milestones. Roughly 20% frees up around the Q2 results in late July or August. Then, smaller slices, about 7% each, at set intervals through the autumn. Then comes the big one. After the Q3 results, roughly 28% of that locked block can release in a single window, the largest single wave before year end. And on December 8, 2026, the whole 180-day block fully expires. The scarcity that lifted this stock has a demolition date stamped on it. One block, though, does not move at all. Musk's own stake, roughly 6.4 billion shares, is locked for 366 days, all the way until June 12, 2027. No early release, no clever trigger, no exceptions. Why keep the founder frozen solid while everyone else is allowed to step out early? 2 reasons. It signals to the market that he isn't cashing out and walking away, but it also quietly parks the single largest supply of shares of all behind a much later door, a door that opens in 2027, long after the smaller ones. The overhang doesn't vanish, it just waits. So look at what the calendar really says. Late July, the autumn, December 8th, next June. These aren't my predictions, I'm not guessing. These are dates already filed with regulators, printed in the prospectus, waiting. The most powerful thing you can do with this stock is stop predicting and start reading the calendar. Which brings us back to where we started. Wall Street is forced to buy on July 7th, but ask the question almost nobody asks. Where do the shares to satisfy all that forced demand eventually come from? They come from the lockup, from the insiders finally allowed to sell into it. The hand that makes the index buy and the hand that lets the insiders sell are the same hand. That's not a coincidence. It's the design. Here's where most people get confused. They assume record IPO means safe stock. But a record price is a measure of demand, not of value. And demand built on scarcity is the most fragile kind, because scarcity, as we just saw, is scheduled to disappear. This is card 3, and it's the part that should make you sit up. We have watched this movie before. Only the cast changes. Consider Facebook in 2012. It also used a staggered lockup. And by the time that lockup finished releasing shares, the stock had fallen more than 40% from its offer price, or Palantir. Retail enthusiasm carried it from $10 toward $40. Then the lockup opened. Insiders sold into that very premium, and the stock dropped 13% in a single session. Why the same shape every time? Because insiders sell when the crowd is most excited, and lockups decide exactly when they're allowed to. Now, blind pessimism is as lazy as blind hype. Let's check the other side, honestly. This is analysis, not investment advice. There is a real case for SpaceX, and it isn't small. Starlink is the one segment that actually earns money, real, recurring subscription revenue, and it is growing quickly. That is a genuine business, not a slide in a pitch deck. And the forced index demand is a real mechanical tailwind for as long as the scarcity lasts. Bulls at firms like New Street Research argue that if you are willing to judge SpaceX over a 20-year horizon rather than 20 weeks, the pieces can genuinely fit. A decade-long lead-in launch, a dominant satellite network, an AI arm folded in. That is the honest bull case, and it deserves to be stated as clearly as the warning. This is how the big money, the smart money, actually reads it. Not as good or bad, but as timing. Cathie Wood's ARK Invest was buying ahead of the index change. Meanwhile, CFRA opened coverage with a sell rating and a target well below the debut price. Two professionals, opposite bets, same stock, because they're weighing scarcity against that unlock calendar. So if predicting is a fool's game, what can you actually do? You watch. 3 checkpoints to watch, just 3. First, the Q2 results window in late July or August, the first real test of insider selling. Does supply hit, and does the price absorb it? Second, the price trigger. If SpaceX trades strongly enough above its offer price across a set window, extra shares can release early, meaning strength itself can invite more supply. Third, December 8th, when the full block expires. Watch whether the stock is already weakening into that date, the way the history books suggest it might. But don't get carried away. Let's be objective about the risks on both sides. Risk 1. The bulls could simply be right, and 20 years of dominance may swamp any short-term unlock wobble. Risk 2. The shorts could be early, and forced buying may hold the line for months. Risk 3. Governance. Musk controls the vast majority of the voting power through super-voting shares. Senator Elizabeth Warren publicly called for tighter scrutiny of exactly that. And risk 4. This company still loses billions of dollars a year with an accumulated deficit north of $40 billion. None of these are predictions. They are the walls of the room you're standing in. But step back, there's a bigger picture worth seeing here. This was never really a story about one rocket company. It's a story about who is really making the decision to buy. When index rules force purchases at any price, the buyer isn't a person judging value. It's a machine following a rule book, and you may be inside it without knowing. Let me bring it together. Don't overcomplicate it. Hold one realistic picture in your head. The same design that made this stock scarce and exciting is scheduled on public dates to make it abundant. Scarcity lifted it. The calendar is what comes next. If you remember one thing from this briefing, make it this. Largest IPO in history describes the size of the demand, not the quality of the deal. On July 7th, Wall Street buys because a rule commands it, not because a rule was ever wise. A machine following a rule book feels no fear of overpaying. So ask yourself the only question that actually matters. Are you buying a rocket, or are you buying demand that a rulebook manufactured on a scarcity that a calendar is scheduled to erase? I won't hand you the answer, because the answer was never mine to give. I've done the honest work. I've hung the calendar on the wall for you. The dates are filed with regulators, the doors are set to open on a schedule, and the rest is genuinely yours to watch. If this made something click for you, like genuinely helps this reach the next person. One more thing before you go. The Vault keeps a watch list of the dates that actually move markets, and this SpaceX unlock calendar has just been pinned to it. When the Q2 window opens, and again in December, we will be watching this board together. What are you watching right now? Tell me below. I read every one of them.